Hello and welcome to Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. Today we will talk about JOYY Incorporated, ticker name JOYY. Stock traded at Nasdaq. Actually quite nice market capitalization, 4.5 billion. Very interesting chart. That's why we would like to speak about it today. It's actually in a very long, almost linear descending channel starting from mid of February. Actually, this is kind of a general trend for many companies we can see, but what is very interesting here in particular, that for that let's look a little bit in magnification here, is the fact that actually this descending channel is linear and it's quite consistent. So if you look here, let's draw it, you can see as a classical correction, this chart is this channel in this chart actually follows and created mainly by moving average 20. So moving average 20 here works simultaneously as a resist and attractor. This is the classical behavior of moving average 20 on the stocks that are turning from so-called stable growth regime, where we have three moving averages aligned like SMA 20 on the SMA 20 on the top, then you have 50 and 200 on bottom. So this is so-called a classical growth regime until this is the case, and when the price is above those, you are growing. That's exactly what we had actually here from beginning of the year. And then once it's broken, you go to the classical correction. And at the classical correction, what happens, moving average 20 works as simultaneous attractor and resist. By the way, similar situation took place from November to end of this year, end of previous year, beginning of this year. After discussing this channel, you will see that actually what happened here was exactly the same, with exactly similar situation pattern taking place. So, but let's come back to current situation. So what's happened here? We see that moving average 20, once price is close to it, it repels it downwards. Once it's lower, it goes up. And this creates the channel itself. The channel is linear descending. And whenever the price is lower, it's on the bottom of the channel. Moving average 20 works as an attractor, so the price goes up. We still cannot say that there is a major change of the trend like it took place for previous descending pattern. And the change of the trend took place by beginning of the year. Here it's still too early to say because we don't have those indications, but what we can clearly see is the fact that we are actually very close to the bottom of the current trend, the current descending channel. So we can already start buying, because any moment we could, and you can draw a little bit higher, any moment we could have a rebound, at least till the top part of the channel, so till moving average 20. This can make you easily 10 to 15%. So therefore our profit taking note will be here for this stock 10 to 15% in our opinion. And actually the buying would be quite simple and straightforward. So the very first levels to buy, it will be actually here, because what might happen, we could go a little bit lower and then slide down with the channel and then repulse, similarly to what we saw by April. Therefore, we can buy already within 67.15 and actually 73.58. So this would be the first primary level to buy through, and from there we should actually take off as a primary pattern and to be able to take profit. So let's write it down for ourselves as a call out, and we can place it here. Still, what might take place, although it's very rare and usually not happening, but we might have accelerated declines. So the second channel might open and we go faster downwards, but then the rebounds will be also faster. Similar situation took place, for example, here you see before the April of previous year, we had, let's say, here one channel going, and then it transferred to faster channel here. Let's put it here, you can see it. And then what happened, it moved even faster with some rebounds and correction. Actually, we had really nice growth. If this is going to happen, this could be a secondary technical situation also here. Then we need to be prepared for this. And as always at our channel, we are doing three levels of buying. First one is a primary technical pattern, second one is secondary technical pattern, the third one is just risk mitigation. We'll talk about it later. So for the secondary technical pattern, we just need to look at the next support levels. These are of course clearly formed here and this should be actually something between 58.37 at the top and 49.91 at the bottom. So let's write it for ourselves as a call out. Yes, indeed, it's quite broad channel, but also volatilities here are quite broad. So that's why the levels we discussed to buy through are also quite broad, but it's quite normal in this situation. So let's write it down. This is our level to buy, hoping if the primary technical pattern is declined, and then we're going to the secondary. And of course, as always, what we do at our channel, we need to mitigate risks due to negative catalysts kicking in, if any. We don't know in which form it might come, but if it's coming, we want to be ready to buy, let's say, and still to turn with profit. This could be usually company-related news or global news, although not expected for now. One of the best examples of global impact these years was actually the COVID very depth previous year, April. And that would be the level where we can aim as a risk mitigating buyout. So we just buy, well, not buy, it's not expected at all to go there, but we always want to be very sure that we exit with profit, or in the worst case scenario with a draw or with very minor loss if anything happens. Therefore, we keep some funds, just keep some funds to buy at the lower levels, because we do not discuss any stop loss, but we do buy non-linearly downwards. This way, if this doomsday scenario takes place and others will be selling, we just buy more and then prepare to rebounce and take the profit, which is designated here. So this would be the third level, therefore, risk mitigation. So these are 3 levels to buy through, and you can buy through with a classical buying strategy that we discuss at our channel. For those who are not first, it means that 5 portion play. So what does it mean? It means that the money you would like to play here, you can split in 5 portions. Then you might buy with the first portion through the first channel. If the primary technical channel is, or the level is declined, then we go to the second technical level, then you can buy with another 2 portions there non-linearly. So this way you will buy with more, so your average price will be very close to the second level. And if we decline on any negative news, not expected at all, but just we want to have it, then you can buy with the remaining 2 portions at the third level. This way it will be the best optimization, profit versus loss. And as I said, we don't discuss any stop losses here, but just buying through, and on a repulse rebounds, you will make the profit. That's the idea. That's how we do it usually. And the worst case scenario should be a draw. Although, because we don't take stop loss, let's say, approach, we might spend a little bit more time to exit with a profit, but that's how we trade. Because idea is, for those who trade with stop loss, they say, okay, we don't want to wait. We don't have money to average down because we put all bets on this price level. We exit with a loss. We accept it, then we go somewhere else, hoping that faster we gain time and faster we can buy somewhere else and make the profit there. Here we say we know the levels, the very deep, very principal levels, so we also keep funds to average down, so we are very secure in that sense. Yes, we might spend a little bit more time, because if things go wrong and we go to the third level, we still need some time to go there. But then we will be always very close to the current price. So at any rebounds, we take the profit and exit happily with some nice profit. So that's the idea behind this strategy. If you like it, don't forget to subscribe to our channel. We always use this approach, and we often use this stocks in correction and ready to rebounds within the channel, or rebounds really change the trend, because these stocks are very easily predictable in their behavior. As you can see, if you look history of the stocks, by the way, even those uploaded up to 5 weeks ago are still fresh, in the sense the situation discussed there, especially if going to second and third levels, is still happening. So you might be in time. So please check those videos as well. You will see from those videos that we really discuss mainly stocks in correction, because stocks in correction are academic examples of how they behave. You can easily predict, easily see what's happening, and easily know where it's going. So it's also one of the ways to mitigate risks during trading, because we don't want to bet on some arbitrary stuff. We want to know what's happening. So if you like this way of trading, as I said, don't forget to subscribe. This is all for the current position. See you at another episode of Stocks Advisor. Good luck, and yeah, good luck for this one actually.